What's going on, everybody? Real Trader Joe here. Welcome back to the channel. In today's episode, I'm going to be covering my personal 3 steps for trade defense. We'll go over what trade defenses are and why they're necessary. I'll cover my 3 steps for determining if and when to defend a trade. And then I also have 2 examples of defenses here in the portfolio. My hope in doing this, of course, is that you'll take something useful from it and make it your own, whether there are points you hadn't thought of before, or whether that provides inspiration for you to defend trades in your own way. I'll also have some links to the Tasty Trade research that I used when making the video so that you guys can see explanations from market researchers. They're very concise, meticulous, thorough, and they present the content in a format that I think is digestible for beginners. A couple announcements before we get started about the channel. If you don't want to hear me prattle on, I've got a timestamp linked above that you can skip to if you just want to get to the educational content. Number 1, I started a Patreon. I am hoping to make this a little bit more communal, and I've decided that supporters of the channel can start to ask questions, which I'll address as a viewer question on the channel here in the videos. I'm hoping it'll be just as much of a growth for me as it will for you. If you guys ask me a question that I don't know the answer to, I'm going to go look it up and get back to you. But I am super excited to launch it, and I hope you guys will support me and grow with me in this journey. So thanks in advance for watching, and I really appreciate all the support so far. Number 2, obviously the blurred background in the video today. I'm using a software in OBS that will mask my background by default, but it doesn't do well with lighting, so I had to blur it out instead. Let me know how it looks, or if it's too bright or distracting, and I'll do my best to find another solution. Thirdly, and this has nothing to do with the channel or videos at large, but just this one, I'm recording this coming off of a sinus infection. I'm all doped up on medicine right now and just cranking this out before I go to bed while it's all still fresh in my mind, so I do apologize if I sound a little bit muted or low on energy today. With all that said, let's get into trade defense. So the first thing that I think it's important to address is, why do we defend trades at all? Well, the stock market is random and it's unpredictable. I think most people know that. We don't know in advance whether stocks are going up and down, and we can only guess. And I like to think of stocks or options or trading, any engagement with the market, as a war. Okay, you're a general, you have a certain amount of soldiers. The soldiers are your capital, and you're deploying them in the best way you see fit to try to get an advantage, where the advantage or winning the war is profiting and losing the war is losing money. So we should think of adjustments as being dynamic generals in a battlefield, right? In World War II, the commanders in the battle didn't just deploy their troops and say, all right, well, you're on your own. Good luck. I'm going to go to my beach house. Not that beaches were the best place to be, because a lot of them got bombarded or invaded or whatever, but you get the point. In any chaotic environment where you have unpredictability, it's important to be dynamic, be fluid, and adjust and react to things as they come up. Defending trades, especially with short options, is part of that whole process. As short premium sellers, we are allowed the opportunity to adjust because rolling out in time gives us more extrinsic value and theta and reduces our directional risk on the trade, giving us more opportunities to be right. This is one of the main advantages of being a short premium seller, because if you paid for an option, most likely you're going to have to roll out in time for a debit, reducing your probability of success and profit margins on the trade, whereas short premium sellers have the advantage of being able to roll for a credit. So how do I think about adjusting a trade? Well, the first question I ask myself is, what is the status of my position and how does it compare to where I'd like it to be? I ask myself these questions in order to determine if I need to adjust the trade. Is my position in the money? How far in the money is it? Should I just close it and be done with it? Stuff like that. So I'll go into the platform here and I'll show you 2 examples of trades where I ask the question, what is my position like? And this in the money symbol is a pretty good place to start. So we'll start with this 85 put that I had on Roku. I adjusted by adding a 100 short call, but we'll get to that later. Right now, I just want to focus on the question, do I need to adjust the trade? So we'll just pull the short put up here. You can see that Roku actually closed in the money slightly, 84.79, so tested our short 85 put, and I decided that I would like to adjust this trade. my short strike's been tested, I wanted to reduce my directional risk, and we also have earnings coming up at the end of the February cycle, so rolling it out in time would mean that I'd be behind earnings, and I wanted to make adjustments in the present cycle. Because my short strike was tested, I determined that it was best if I adjust this trade. Similarly, I went through the same process with Sunrun Solar. Sunrun, I originally had the 15 short put on for, and with Sunrun closing at 14.21, it was well past my $1.63 collected credits on the position. So this position probably needed adjusting prior to the adjustments that I had made to it, and I had decided that yes, these two positions, Roku and Sunrun, were both in the money and needed attention. Typically, that's a good place to start. If your position is in the money or your short strikes are tested, that is a good starting point for determining adjustments. It's also worth noting that sometimes if you're really in trouble and the position really is in the money, it may be best to just close the position out for a 2x or 3x loser, depending on some of the portfolio dynamics that I'll get to in a minute. But just understand that when you're determining if you need to roll, you should also be thinking about if you want to just close the position out and be done with it. More of the information that we'll cover next will help you in this decision. Because options are derivative securities, and each position has an underlying stock as well, I think that one other useful input to determining if I need to adjust a position is the status of the underlying stock. I'm not a technical analysis guy, but it's worth noting here that Roku's been in a precipitous drop for the last month or so, and it is also worth noting that IVR has expanded significantly over the past few trading days. These indicate some uncertainty in the underlying stock and an increase in the option prices associated with that underlying, which is good information to know. If we look at the implied volatility of about 74% and the IV rank of 58 and change, this is useful information to understand that option prices are increasing, and it should be another input when deciding when to adjust a position. In my case with Roku, because we had an IVR increase, I decided that an adjustment would not only reduce my directional risk on the trade, but also allow myself to collect advantageous premium since the option prices were increasing. If you look at Roku here, it's at about $85 approximately, the 80 strikes trading for about $450, $460, and the 90 strikes trading for about $495, $510. So we see some slight call skew here in addition to the increase in volatility. We'll come back to this when I go over why I made the adjustment that I made. The case of Sunrun Solar was a little bit different. As I said, we are about $1.80 in the money, and I've only collected about $1.63 on the position, so we're past even my collected credits at this point in the position. And for that reason, I decided my adjustment would need to be more severe, and I'd need to just go to the at-the-money strike. The third thing to consider when making adjustments is what is the status of my portfolio. Portfolio delta or theta are useful to consider here and should be a determining factor in how you adjust the trade. You should also consider existing positions that you have on which may run in sympathy with or correlate to your existing positions. So when considering portfolio dynamics, I think it's helpful to determine what your directional bias is and if that directional bias is going to be maintained if the market continues to move in one direction or the other. So I have actually a bullish portfolio right now. I have about 40 to 50 bullish SPY beta weighted deltas, but a lot of that bullish delta is dynamic from strangles like Enphase and Coinbase contributing to a significant portion of that beta weighted delta, 10 for Enphase, 22 for Coinbase. So that's 32 deltas that could evaporate if Coinbase or Enphase decide to rally, which would be good for me, but it would leave me shorter. The rest of the bullish deltas in Boeing and ARM are legitimate short puts that are static, but a lot of the bearish deltas in my portfolio, my broken wing butterfly in NVIDIA, my short calls in Intel and Uber, my short vertical spread in Meta, they're all static positions. So what that means for me is that if the market continues to move to the downside, my bullish portfolio deltas are going to continue to grow and my exposure to the downside is going to increase. So it was important for me to make adjustments that offset the potential to increase my bullish deltas, particularly because my market assumptions are actually bearish at the moment. I don't think we're going to retrace or exceed the 4,800 level in the SPY. If we just look at a chart real quick, we hit an all-time high around 4,800, dipped back, having trouble retracing it. I think we're due for another dip or even a correction to the downside. I know I kind of spoiled the surprises already when discussing the previous questions for the adjustments, but now I'll actually go over how I made the adjustments that I made given all the factors that we've discussed so far. So I know I need bearish delta. I know my portfolio is a little too bullish. We're tested on both of our short strikes. The Roku adjustment didn't need to be as aggressive. I decided to just go ahead and sell a 100 short call. This is in line with the increasing IVR, gives us more opportunity to pick up premium and an expanding IVR underlying, gives us an opportunity to do so in a cycle that's before earnings, gives us an extra $2 to the downside, and I don't think that this is too aggressive. If we look at the overall profit on the position, we still have a 50% chance to make all of our profit, and probably a higher probability to make 50% of that, which is what I'm after. If Roku rallies to 93, I'm still slightly bearish, but it's not the end of the world. We also have about $6 in collected credits, so we're pretty much right here at the end of the diagram. Anywhere in this range approximately is going to be good for us, and we still have time or room to adjust these strikes if Roku gets out of hand. As I mentioned earlier, the case of Sunrun Solar is a little bit different. We had to just go straight to the at-the-money strike because we were already past the break-even point from our collected credits. And with it being a smaller underlying, I'm not too concerned about a massive swing to the upside as I am in Roku, so I felt it was fine to be a little bit more aggressive here. I wanted to neutralize our directional risk. Doesn't seem like the market is particularly happy with Sunrun Solar. It's just been on a tear to the downside, and if that continues, I want a little bit more room. This at-the-money straddle also fits with the increasing IV rank in the underlying and is not an adjustment that rolls us out in time behind the earnings, similarly to the Roku adjustments. Well, guys, I hope that was useful. I hope you learned something. If you did, don't forget to like, comment, and subscribe. See you next time.